Well, hello there, traders and friends right around the world. It is James here with you on behalf of Pivot Point Trading, bringing you this little quick market recap as it stands on Saturday, the 20th of June, 2015. We do have another full week of trading upcoming, kicking off on Monday, the 22nd, which will almost round out the month of June 2015. It has been quite a frustrating year to date, so to speak. We are up on the year, but it has been relatively flat over the past 6 months, up 191 points on the Dow Jones Industrial Average. A little bit of a different story, more so bullish on the Nasdaq. But at this particular moment in time, although the range-bound markets continue, they are continuing to move sideways. Whether this is distribution or not, it is a very timely reminder to at least go back and study the foundations of Dow theory. What I have done, I've just recorded the pro analysis class as at this weekend, and what we did, we sort of moved away from the general formation or general form which I like to take week in, week out. Included in this weekend's class was a 30-minute discussion on Dow theory. It really answers a lot of the questions as to what on earth is going on with these markets. Are we actually bullish? Are we bearish? What to expect moving further or moving forward into 2015, and just a really good at least address on the overall market structure, the state of the markets, and where I believe they are heading if they start ticking different types of boxes. I really encourage a lot of people to have a look at that class. It's really, I guess, a fantastic educational resource. Let me know if you want to have a look. Email me success@pivotpoint-trading.com. Right now, however, we are completely neutral. I mean, there's just far too much to break down in this 10 or so minute weekend market update. All I can really say right now is to really be selective in the trades which you are picking. One form of Dow theory which I want to quickly go over is just to make sure that the markets are in agreement until you get carried away on the bullish side of the market. Obviously, there's a lot of complacency set around these all-time highs on all three of the US markets. You've got the Nasdaq as at Thursday pushing up into all-time highs. We closed above that 2000 level for the first time in 15 years. We have tasted the highs, which have taken the better part of 1.5 decades to reach. It was the final market to get there. The Dow Jones and the S&P got there earlier in the year, but I think factually speaking, we're done. I mean, this is it. We've hit these levels. Will the party continue? Who knows what's going to happen? What I can say, however, is that before I get carried away and start celebrating on the continuation of this long-term primary bullish trend, which has been in effect for 6 years right now, I really want to see the Dow Jones Industrial Average and also the S&P 500 break above these resistance levels, agree with where the Nasdaq is sitting right now, and to see the market leaders, or at least the individual stocks, the big tech companies, come to the forefront and drive this market higher. At the moment, we have Apple, which has just been in an absolute funk sideways. It's not leading the market whatsoever. You have Google as well, which is still struggling to break above these, highs back to March, April, and May. If I zoom out to a weekly, I mean, it really looks like a descending triangle, so to speak. I'm not sure if it's indicative of a strong market, whether it's just a rotational move in Google and also Apple. Time will tell. But when we take a look through our top 12 individual trade lists, I'm not going to reveal any more, so to speak. It's really, really neutral. I can make the argument, and what I've done over the past 1 hour and 30 minutes in that recorded class online is make both the bullish argument long-term for the markets, and I've also gone through a checklist of what we will need to see in the event that we see a primary trend reversal. I'm not calling for it whatsoever at this particular moment in time or at this current juncture in June, but it looks awfully reminiscent of some form of distribution. Whether or not we look back and we say, look, it was just simply a sideways move and we retested the primary trend and the bullish trend continues, I think that is going to be answered maybe in July 2015. But I'm very interested. I'm intrigued to see what the market does over the next 5 trading sessions. And I really just wanted to encourage people on YouTube who listen to me, who listen to these like snippets, these little quick snapshots of market analysis, to have a look at that pro, because again, it's been an hour and a half class, 30-minute discussion on Dow theory in and of itself, speaking about all of these really great topics such as decelerating and accelerating fan lines. We're speaking about the primary trend versus the intermediate and the minor level. I mean, the market's in agreement. I mean, the volume confirmation across all three of the markets. The transports, I mean, I'll share this with you right now just as a little quick goody-goody. The transports, this is something which we've been tracking, and we've really been ahead of the market, so to speak, in the actual analysis. We mentioned the fact that we could be breaking support during April 2015 if we didn't see the sustained bounce. Instead, we've broken below 8,471. I can almost bet that at some stage over the next week, maybe 2 weeks, as soon as we see this golden cross, you are going to see an influx of market reports, media news saying that, look, we've just seen the golden cross, the 100 cross below the 200. We're ushering in a bear market. Please do not subscribe to that lunacy at this particular moment in time. None of these things set up over days and weeks, and just because you get across on the 100 and the 200 on the transports, it's not indicative whatsoever of where the S&P, the Dow Jones Industrial Average, and the Nasdaq will move further into 2015. I went through and highlighted general market form of what I believe will happen on the transports, especially once we see this cross and people start to sort of worry a little bit more based on the form that we're seeing over the past year on the transports themselves. So I'll leave it at this for this weekend market update. If there's anything to take away from this YouTube channel at this particular moment in time, go into the week absolutely neutral. We have been neutral over the past 3 weeks. We've tried to pick the bottoms and at least be reluctant to buy the tops. It's worked out generally fairly well. A lot of people are getting absolutely whipsawed to death during the sideways market move. We've had some absolutely fantastic trades in this analysis class. We've cut loose Facebook in the process. We've cut loose GoPro also in the process, but we have an absolutely fantastic trade on CVX, the Chevron Corporation, which I'm excited to see play out over maybe potentially this week. If not, definitely I will say over the next 2 to 3 weeks in that general rotation. So I'll leave it at that. It isn't too much into the market formation or individual trade setups. We did cover 12 setups, and I think that's it. I've been on the airwaves for close to 2 hours right now, and I am going to enjoy my Saturday evening. I wish you all a very nice and extended weekend, no matter where you are around the world. But I am very excited, being so passionate about the markets, to see where these markets move to over the next 5 trading sessions and really further into July 2015. I was hoping at least that Janet Yellen would shake the market loose on Wednesday. It didn't eventuate, and we're still range bound. So surprise, surprise, volatility is continuing to pick up right between support and resistance. But the overall net movement on the markets themselves, it's been a very, very disappointing return for a long-term investor holding throughout 2015 so far this year. So I'll leave it at that. Have a fantastic weekend, everybody. I'll be back with some more intermarket updates throughout the week as the market progresses, but it's more so just recapping trades which we go through over the weekend in that analysis workshop class. So have a great weekend. That'll end it. I will see you during the week. All the best friends and traders right around the world. It is James signing off on behalf of Pivot Point Trading. All the best. Goodbye.